I will probably end up seeing Super Mario within the next 2 weeks. I will probably go see the Minions movie that comes out in a little bit. I will probably go see the Moana movie. That you see where I'm going with this? I will not be going to see any of the grown-up adult movies that you guys are excited about. But I also appreciate that all of the ones that I just mentioned for the last 30 plus years, Pixar, Disney, whoever else has been doing a good job of making it so that the parents aren't bored to tears when they go to see these too. There's these little nuggets of comedy that are in there for the grown-ups. So I don't feel too bad about it.
Wait a second. Why aren't you seeing a single grown-up movie this summer? There's so many good. You have a couple of hours. Market's slowing down.
I only go to the movies at this point live in person because I have a little person that loves sitting in the giant chair and shouting at the screen. Like
shouting at the screen?
Yeah, she's that person.
Okay, this is why I go to the Alamo Draft House. Despite its flaws, you can get kicked out for talking during the movie.
Oh, we go to the Alamo, so it's a good thing that you don't go to the one here in DC because me and my little person definitely go to the Alamo, and she likes to shout at the screen and like tell Mario don't go down that tube or whatever.
Yeah, and there's also a difference in expectation of what you expect from audience behavior if you're seeing a Super Mario at 1 p.m. on a Saturday.
Yeah, well, during the week, this will be 1 or 2 p.m. on a weekday.
Okay,
and you have no business taking yourself too seriously if you happen to be in here with the children.
I think that's fair. And then you get to the other side of it, which is I'll hear adults talking during, obsession in backrooms, but it's not like they're trying to be rude. You blurt during a horror movie. Oh no, that type of thing. So
no, the thing that really pisses me off is the people who interact with their phones during the movie. Like we have forgotten how to be non-cyborgs and just be people who sit still for 90 minutes and watch the thing in front of us with everybody else. We have our brains have completely forgotten what that is like. And so it pisses me off. I went to see the Michael Jackson movie not that long ago. And the one complaint I had was not the people who felt the need to get up and dance during the movie, because it did have that kind of an effect. Like it made you feel like you were in the concert. It was the people who the light from their phone kept lighting up and they're like typing and waving it around, and the people who answered the phone and like, no, I can talk. No, you can't talk. We all have something to do right now. And it's in front of us.
Call during that?
I saw multiple times where somebody put the phone up to their ear and whispered to somebody, and then not like, hey, I can't talk right now, I'll call you back, but literally like continued on for minutes of conversation. And I, just had to like ignore it and say like, this is where we are as a society now. The world is just screwed up and I'm the old man shouting at the clouds, but it pisses me off.
Okay, this is why you go to the Alamo at night. They encourage you to rat on the people around you for talking and using their phone, unless you're ordering, which is a whole other controversy I don't want to get into. Yeah. But I think there is an appeal for people that want to go to spaces that involves not using your phone. And I think that's one of the reasons you're seeing the box office come back this summer. We'll have more heavy-hitting investment.
I'm glad to hear that the box office is back, though, because for so long, there were so many people counting on the demise of movie theaters. And movie theaters are one of those places that you can go and commune with strangers without having to interact with the strangers under normal circumstances. Like, there's 200 people experiencing this thing all at the same time. And it gives you the feeling that you went to a place where there were other people being people instead of sitting in your house watching yet again another movie like I will do.
Well, let me give you the numbers. Summer domestic box office down 2% from 2019 levels. Total is down about 15%. So from 2019. And the reason box office watchers point to that is because that was the high watermark, was 2019, right before the pandemic.
Yeah.
Prices were up. I think movie going peaked earlier than that because these movie theaters and distributors have been making up for a lack of attendance with price increases. But there was this idea that I think once the superhero movie was over, once you couldn't count on Captain Marvel just automatically making $1 billion at the worldwide box office, that things would deteriorate. What do you do when IP is kind of going downhill? And it turns out that people still like IP. They like familiar stories. They're just looking for it in other places.
But 15% is nothing when you consider the fact that, like you said, we survived a global pandemic that made it illegal for us to be too close to each other. We survived during that same time. People's home theaters got massively better because they invested in sound systems and bigger TVs and dedicated an entire room to it and all that crap. People put viewing systems in their backyards and projectors up against the sides of their house. And like there were all these different things that got created as an alternative to going to a physical movie theater. So for you to be talking about a 15% decrease coming out of that period, that's nothing.
And the other part of that is that theatrical windows pretty much collapsed. So there used to be a long period of time between I'm releasing this movie in theaters and then now you can watch it at home. You think of back to the Blockbuster days. I think sometimes it was as long as 6 months where you had to wait to see a movie on screen. Now that's collapsed in some cases to 14 days. If Netflix has its way, it'll be 0, even though they've kind of given some lip service to
there was a writer's strike.
There was a writer's strike. So let me get to the IP point. Something, though, has changed within that time. In 2019, you could have intellectual property that people were familiar with. People would just show up for a superhero movie or characters they're familiar with. And now you're seeing a more sort of what I would say refined demand from the audience. And there's some cases that go above and beyond. Super Mario, that'll do fine. It made $1 billion. It got mixed reviews. People love Mario. They want to see it on the big screen. But some of these IP bets, Mandalorian and Grogu, Masters of the Universe, Supergirl, all of these are going to lose money, probably, at the box office. And it's because these studios seem to want to make these expensive 4-quadrant bets on something you have kind of heard of. And what has taken the box office by storm are these filmmakers, young filmmakers who have a following on YouTube, Kane Parsons with Backrooms, Curry Barker with Obsession, and they make these smaller budget horror movies. In the case of Backrooms, it actually is intellectual property tied to a very popular YouTube series. And these become those explosive venture capital style bets where a movie like Obsession is made for under $1 million. And as we record this, it's made over $340 million at the worldwide box office. And I think there's a few reasons for that. To the point of horror, that is something where you really want to experience that with people. Like I have visceral memories of now seeing Obsession with Sam last couple weekends ago, seeing Backrooms with people I didn't know, or even last year seeing Sinners and Weapons with a big crowd. You get that energy from at least you get that energy from a horror movie when you see that with a group of people, making it well worth the price of admission. But I think what's interesting here is you're seeing, in some ways a bubble burst with the superhero movies. You're going to see Hollywood studios learn the wrong lessons from this, which is let's sign up a bunch of YouTubers to make movies. But you're also seeing audiences say, no, we can take intense, and in the case of Backrooms, I would say complex and ambiguous storytelling and still show up for it. Let's do the show. All right. Today, I want to get into the Wendy's meme stock frenzy. There's a lot going on there. There's some fake Polymarket bets that are in the darkest part of the casino. And then maybe, just maybe, Malcolm has some things that he's been talking about on CNN that he wants a longer form medium to discuss.
I don't work on CNN, by the way.
Oh, CNBC. Shoot.
It's fine. It's fine. You know where to find me.
Malcolm, there are some degenerate topics that we're going to get into.
Mm-hmm.
However, are there any classy long-term investing topics or trends that you want to bring up before I talk about how Wendy's is the next meme stock?
So I just started buying shares in Netflix. I won't say a ton on it just yet, but the main reason is because the price fell back down to where it was pre-announcement with WBD acquisition talks.
Okay.
And they got the breakup fee that they get to go spend however they want. They also seem to have found some religion around the idea that they are going to have to create and promote original content as their growth strategy, not going and buying a giant catalog of yesteryear's movies that maybe people show up for and maybe they don't. And I think that investors are underappreciating just how much of a utility Netflix has become. It's a durable good at this point rather than a discretionary item for a lot of households. Like, people would cut a lot of other subscriptions well before they ever cut Netflix, even as Netflix has been increasing pricing. I think they had 2 price increases in the last 2 years. I personally can't even tell you what I pay for Netflix every month. And it doesn't matter. I get the email that says we're going to charge you another $1.50, and I say, have at it. So for that reason alone, Netflix to me looks very cheap here in the low 70s, let's say, depending on when you're listening to this. And it looks to me like an opportunity to catch the next trend in movie making, storytelling, everything else that you and I have been talking about to this point. So that's that. But also, like, I just came back from a week at the beach with my family, and I did a really good job of not paying too much attention to what was happening in the outside world away from the beach.
Nice.
One thing I realized is it's really hard to turn off that part of my brain that sees an investment opportunity in just about everything.
Yeah.
Like, as I'm driving around Delaware, looking at the beach town that is Bethany Beach, I keep seeing things like, oh, this place needs this. Why don't they have this? Somebody'd make a ton of money if they would take a few $1,000s and develop this. And I'm like, I don't want to come here to work. Like, I want to come here to be at the beach. I keep going back and forth with, like, do we want to own anything in this place and actually, like, come way more frequently than we currently do? But I'm also afraid of, I'm going to turn that into some kind of a business instead of it being the family refuge that it's meant to be. But for the most part, I was able to turn my brain off and really, like, unplug from following along too much with the news of the world, the news of the markets, everything else.
You're ready to leave financial advising and commentating on cable news and just go open a coffee shop on the beach. Maybe this is less about business ideas and more about self-reflection. Is there more we need to get into there, Malcolm?
Oh, I am very much suited to being a beach bum. I wouldn't do it here in the States. I could see me definitely, though, like, teaching a snorkeling class or a surfing class, neither of which I actually know how to do, but teaching something like that somewhere in the Caribbean where I get to literally live on the water every single day, and that is my front door. Like, that is definitely the dream.
So here's what's kind of, you mentioned the price of Netflix valuation. Okay, so right now the S&P 500 is trading at about 29 times trailing earnings.
Mm-hmm.
Netflix is at 24.
Mm-hmm.
So Netflix is at a discount to the market, which for a great company like Netflix, those instances are pretty rare.
Mm-hmm. And
so it's just
20% or so below its 200-day moving average. That's off the top of my head. I don't know what it's moved to this morning.
Yeah.
But that is a substantial discount to most of the leaders in the S&P 500. Most of them are at a premium to their 200-day moving average. Netflix is significantly below it.
And maybe it's still being punished for chasing after Warner Brothers for a quick spring fling. Maybe getting an opponent to pay more for it in a master game theory move. And then now it has a bunch of money to, go do other things. I think the question for Netflix, though, is, and we can move on, I promise, is just, do they need to figure something else out besides streaming? Have they
absolutely
have they squeezed the juice out of it? Because to your point, there will come a time where people do look at their Netflix bill and say, let's just rotate it out this month.
I don't see that future as coming anytime soon. That definitely could happen to them if they don't figure out a way to grow out of this rut that they're in. And people seem to look at Netflix as sort of a rudderless ship right now. And there's no real strategy that says this is how they're going to grow users in the future. And I don't even necessarily think they can grow users, but so much in the future, because who doesn't already have a Netflix account that wants one around the globe? Same thing you could say about Facebook. Like, how is Facebook going to grow their monthly active users from here? Who doesn't already have 7 Facebook accounts for themselves, their dog, their business, everything? So it's not going to come from user growth. It's going to come from creating more value that people are willing to continually pay up for. And I think when you look at the YouTube strategy and how creator content has grown YouTube to a tremendous cash generator for Alphabet, I think that Netflix can do something similar, especially since they just started incorporating advertising into the mix. And the thing that really earns income for YouTube is all of the ads that pop up every 16 words into a video you watch on the platform.
So if you're listening closely, you'll notice that Malcolm just admitted to having burner social media accounts after asking who doesn't have 7 Facebook accounts. I think there's a lot of listeners. Let us know in the Spotify comments, how many Facebook accounts do you personally have? Because 7 seems like a high number for you, your business, your dog, your right-wing conspiracy theories, your left-wing talking points that you want to get into, and the stuff that you want to just be able to say without your work seeing you. To the actual stock point you're making, I think Netflix's move is, what can they do in person? So they've tried it with Netflix Houses, which is sort of this live interactive thing that you go into and you see different exhibits of like Squid Game. They tried a Broadway show with Stranger Things. They're working on an arena tour with K-pop Demon Hunters. But ultimately, that's the Disney strategy, which is you have content that gets you to the parks, and maybe that's what Netflix can figure out as well. It's also a part of this theme that I've been thinking about, which is what was taken to be true but is no longer true. And there's a piece in The Economist from a couple of weeks ago that was really good, saying that basically America has a strong cultural power in the world, but it is no longer the cultural center. Content has become much cheaper to make, and people are attracted to things that are made locally. So for example, in Brazil, 10 of the top 10 streamed songs in Brazil last year were in Portuguese. It was local artists. So people want sort of more localized content, and that's more possible when there's fewer barriers to entry. Things can be made a little bit cheaper. And then you have those occasional undeniable breakouts of, Squid Game, Taylor Swift, Blackpink, these things that are just undeniable and then catch the world by storm, but they start with that sort of burning hot cultural center. Netflix is in the perfect place for that because they're investing in localized content. And then if something is so good that you notice it, then it becomes a worldwide phenomenon. Similar to, I think it was the British show that won some Emmys last year. That was like The Single Shot. I can't think of it. But anyway, my point is that Netflix is in a spot to really take advantage of that as well.
Live events, not in person, but on TV as well. So not leaning harder into live sporting events. I don't think that's worth breaking the bank for if you're Netflix. But I think live events like the roast of Tom Brady, the roast of Kevin Hart, the boxing matches, those kinds of things that are cultural moments like you're talking about that people refer to and like, did you see ... And because it's live and then also going to be recorded, you can jump into the did you see a week later and still feel like you're part of that moment that people are referring to. And I think that is also a great strategy for these guys as they figure out the original content aspect of it that's going to compete with YouTube.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to Wealth Management. Again, that web address is www.capgllc.com.
Let's get into Wendy's. Is Wendy's the next GameStop? And what we described previously with Netflix was investing. I would describe this as more informed speculation. And this is a case where you're seeing some longs get loud. And last week, not that this is a perfect representation of data, WallStreetBets, Wendy's was being discussed more often than SpaceX. So that to me says a couple of things. One, when something comes in hot, it comes in hot, but these things can fade quickly. But this is a $1 to $2 billion company with more action on WallStreetBets than SpaceX. The stock story is pretty simple. They have pay a high dividend. There's a buyout rumor that had been floating around earlier. There's activist investors on board. There's a nostalgia factor in terms of the story that people can tell on the internet. If you remember, growing up in Cincinnati, Ohio, Wendy's is one of the few places you can go as a teenager past 10 o'clock that's open with the restaurants open inside. Importantly for this stuff, which is disgusting, it's memeable. Sir, this is a Wendy's. When you go broke trading options, then you can get your job at Wendy's. And when I was looking at the comment action on WallStreetBets, I was going through the profiles. A lot of these people appear to be real that are discussing it. It's also a cheap share price. So I'm seeing this sort of storm going into, the drum beats getting louder for Wendy's to become another meme stock insanity situation.
The one downside to that argument is there's so many other things out there to distract people away from Wendy's that the GameStop moment can never be recreated. I know that's a very bold statement, but I mean that literally. The GameStop moment, the meme stock mania that was GameStop, will never happen again. And the reason I'm saying that specific to Wendy's is because just as I am getting into the Wendy's story and I'm getting all bulled up and I'm willing to go leverage my house to buy shares of Wendy's because I know it's going to the moon. Well, then Micron suddenly has a 18% day. And then, SanDisk suddenly has a 12% day. And then on and on. And then suddenly SpaceX is important again. And then Anthropic goes public and look over here. And then, oh, no, guys, look over here. And there wasn't that kind of competition at the time that GameStop became what it was. Maybe you had people caring about Bitcoin specifically simultaneously, and it was the same crowd chasing both. But I even think that the GameStop people were louder than the Bitcoin people at that moment. And so you don't have everybody's attention is way too spread for Wendy's to get the same level of buying pressure that we had back then or any other company again.
I'm going to provide a counter. This is not like GameStop, but in a good way. Unlike GameStop at the time, Wendy's makes a profit. So you can look at cash flow figures. You can say, oh, it's trading at 7 times cash flow. It cut its dividend, which is not good. But I think, depending on when you look at it, pays about a 7% dividend. It's about a 70% payout ratio. And then there are elements that rhyme with GameStop, which is that, I think as of Friday, 80% of the shares that can be borrowed for short selling are already being borrowed. So there is, that's the type of explosive, tinder that you're kind of looking at for that type of thing. And so, no, is this story going to be GameStop 2.0? Probably not. But can it rhyme with GameStop? Maybe. And there's another possibility, which is that, the share price is back to where it was, I think, like a couple of months ago as these drum beats are getting louder. This thing didn't shoot off into the stratosphere yet. It's still a beaten down stock that Nelson Peltz is that Nelson Peltz is involved with as an activist investor.
I think it's more likely to rhyme with AMC or Hertz, where there was a collective effort to try and recreate that moment. And it fizzled. There were a few people in the very beginning who were on the right side of the pump and dump, and they got an opportunity to pump, but it didn't go nearly as stratospheric as GameStop did. And it didn't last nearly as long as GameStop did. I think that this is more likely to be that, a manufactured meme stock moment that hits a lot less people and also doesn't stay nearly as long.
But Hertz still went up when it was in its moment. I think it almost doubled.
Yeah,
like if you
GameStop
can be okay with a smaller return, if you can be okay with a smaller return, sometimes these can be informed speculative opportunities. But to your point, this is playing with gasoline. So never put in more than you can afford to get hurt with. I put a bet on this. But however, given the volatility of this stuff, by the time you're listening to it, I may have bought more or I may be out because this stuff is just so volatile. It's something worth paying attention to. And then I am seeing, in my view, sketchy stuff in the news media about it, which is there was an article in Barron's that was trying to make the case that Wendy's stock was hotter than Micron. And the way that they said that was that they looked at just the share count trading hands. And they're, after Micron earnings, more shares of Wendy's traded hands. And the conclusion was, therefore, Wendy's stock is hotter than Micron. But this, in economics, is the framing effect. How do we use data to convince people to come to a certain conclusion? What they left out of that article was the share price. And Micron's share price is, I think it's, what is it? On any given day, it's between, $9.50 and $1,300. Wendy's stock is $7-8. So the real dollar volume that was being traded was about 1% of Micron's. However, that's not as splashy of a story as you're trying to talk about a meme stock. So when you see stories like that, I'm wondering, why are we writing this right now and using this framing that leaves an important part of the picture out?
Where's the catalyst is the question. Do people suddenly start going to Wendy's from Chick-fil-A and Chipotle and Panera and whatever the rest of the fast casual premium products are, trade down to Wendy's? And I'm saying this facetiously because Wendy's costs just as much as going to those other places, but perception wise, do I trade down from the fast casual place that doesn't have a drive-through that I have to come inside to get my food to suddenly the drive-through that used to have a $1 menu, but it's now a $2.50 menu or whatever? I don't actually know. I haven't been to Wendy's in a while, but I remember being blown away by how expensive the $1 menu was. But you get what I'm saying? Where is the catalyst that makes people suddenly care about Wendy's again in a way that means they're spending more money at Wendy's? So the average ticket charge is going up, and that's what really puts money in my pocket as a shareholder. Because I can tell you where the catalyst is for Micron. I can't really explain the bull case for Wendy's.
It's a cooling a melting ice cube story is I think the best they can do with it. They have their Project Fresh initiative where we're going to cut hours on underperforming locations. We're going to look at certain, one of the blames for their dip in same restaurant sales was that a Takis promotion didn't go as well as it could have. And so, it is Malcolm shaking his head. That's what you're looking at from a business perspective. What I am looking at is the tinderbox of a stock price manipulation, which is this. When you mentioned Hertz, for example, Hertz is not as memeable as Wendy's.
But they had Tom Brady driving Teslas.
Yeah, but that doesn't matter in terms of people on the internet. Wendy's has, the red hair girl is a logo. You have the nostalgia factor.
It was right there. I have to stop you. It was right there in front of you, and you drove right past it so many times. Wendy's has tendies is where I thought you were taking this. Twice you used the term tinderbox, and you were describing kindling that gets set on fire, and it's this dry brush that is so susceptible to fire that it's easy to use as an accelerant, right? But I thought somewhere in there you were going to pick up the low-hanging fruit of the tendy in the tinderbox, and that is the thing that Wendy, if my brain could memify this conversation that way, and I am so not online, I figured that was where you were leading us to all along.
How do you feel about being an adult male and going to a Wendy's and for their new promotion, going up to another adult and saying, "Can I get some tendies?"
I guarantee you it happened this morning.
Tendies.
I guarantee you it happened this morning.
Not.
Oh, whoa.
Would you do that as an adult and go to another adult and say, "I need a 4-piece tendies with 2 sauces"?
If they had a free promotion going on where I would get, as a result of using the secret passphrase, I would get a free meal, I might be convinced to utter those words.
Okay, so Malcolm is he's more suspicious of this. I am suspicious as well. However, I do think there's some elements there. Protect yourself at all times would be my advice with this. And this is not real investing. Let's get into another part of the darkest part of the casino, which is these prediction markets. An incredible Wall Street Journal piece on this from last week. Polymarket basically paying people to make fake bets. Then the people celebrated winning their fake bets on social media. This is something that I had kind of looked at a little bit and questioned with Kalshi specifically, and the Wall Street Journal proved it with Polymarket. They found 118 videos depicting creators winning almost $900,000, but in reality, those bets would have lost more than $166,000. And the way they did this is they were having content creators plugging fake bets into a creatively misspelled URL, which is poiymarket.com. But if you can imagine, the uppercase I looks a lot like an L. And if you're scrolling on social media, it looks fake. So basically, they had these content creators placing fake bets, trying to convince other people that they could get rich trading on prediction markets. Malcolm, your thoughts?
Big surprise. You can't trust the things you see on the internet. Yeah. Breaking news, right? Like, I was, though, pissed off on behalf of the people who have gotten taken as a result of these kinds of schemes. For one, as I'm reading this, it sounds as if these ploys are being targeted at the United States. It's unfortunate because, like, we are so online and we are so susceptible to crap that people know that this is a good place to go make a quick buck. Like, we are the... what's the word I'm looking for? We are we're the mark.
Target.
We're the mark for the rest of the world, where the scammers live. Those people have more money than they have sense. Go get you some. That's basically what this says to the rest of the world. They've been influencing our elections to benefit themselves. They've been influencing our buying habits to benefit themselves. Now they're benefiting themselves based on our stupidity when it comes to trying to flip a quick buck on these betting sites. Like, that's the part that kind of pissed me off. As an American, I was pissed off for my fellow American. Here we are on the 250th anniversary of this country, getting bilked by outsiders. We don't allow scammers to scam our citizens. We scam our citizens ourselves, okay? That is the way we do things here in America. So I got pissed off at that part.
I was pissed off at the deliberateness of this and also the laziness.
It's sinister.
It was sinister. It's one of those things where I'm like, can you pierce the limited liability veil of a corporation and say, you knowingly, if you're creating a fake website for fake bets, you are knowingly committing a fraud, right? You can't say that, whoopsie, that was an accident. And then when you're someone who is placing a fake bet and pretending that that is real, isn't that the definition of fraud? And so when you say that, of course, the people at the top would never get hurt. You'd get some, 19-year-old influencer who was trying to make $2,000 end up going to jail. But I'm like, the thing that is so annoying about this, or not even annoying, enraging about this, is that it was so deliberate. And also the laziness, which is Polymarket has their users' email addresses. Why wouldn't you go find someone that made a big bet and won a big bet and say, hey, can you make a video talking about the bet you made on New York City weather or the World Cup or whatever? And just, you could actually use a real person. They have the data for it, but in some ways they were being both deliberate and lazy in order to mislead users, or mislead what I would say is the youth.
I want to go back to something you started on, though. In your opinion, I think we agree somebody should go to jail for this. In your opinion, do the 19-year-old college-age creators go to jail behind this?
creators of the video.
The videos. You knew that you were getting paid to create a fake video that was going to influence people like you probably to spend money to make these bets that you knew were going to fail.
Can I say jail but not prison? Is that too? Like, I don't think someone should necessarily go to prison for that for years. If you're 19 years old, I did stupid stuff when I was 19. I think the people that should be held more responsible are those writing the check than those receiving the checks.
I don't disagree with that, but you can't get those who are writing the checks. They're off on some island off
Panama.
Off Taiwan somewhere that you can't get them. But you can get the U.S. citizens who intentionally harmed fellow U.S. citizens with this scam. Do they go to jail?
I think so. Like, I think you knew you were committing a fraud. Like, I think if you knew you were committing a fraud, it's probation, jail. I want to know exactly what happened. How, is there proof that they knew that it was fraudulent? What did they know? When did they know it? But I think they should at least, I think they should have a trial. How about that? In the American system, on our 250th anniversary, I don't want to immediately call someone guilty. I want someone to go to trial and let a jury of their peers decide. How's that for a pivot and a non-answer?
You're bending yourself into a pretzel to not have to say yes. And then the problem with the outcome that you just created in this hypothetical scenario is that those who are the scammers who come from means will get off, and those who are the scammers that do not come from means will serve real jail time. So now I got the guy who goes to Stanford and Rose Crew and his parents have a building named after them. He's going to get off, even though he knew all along he was as guilty as the next person who was doing this, who comes from somewhere completely different, has no money to afford an attorney, and is going to sit in jail for a year behind this whole thing. So based on the way that you just structured this, real justice doesn't actually get done equitably anyway.
Well, Malcolm, your alternative to this is deciding whether someone is guilty or not guilty via podcast, though, which seems to be...
Well, what else is there besides social media justice? Like, what are you talking about here? In the court of public opinion, my opinion I'm sharing publicly.
Yeah.
All of these people deserve to go to jail. And to your point, I don't think anybody deserves to spend 40 years of their lives in jail over this whole thing. But if Elizabeth Holmes goes to jail because she knowingly created false statistics to get her investors to give her more money for this business that she knew was based on Michigas, let's say, to be nice about it, then I think that there's some degree of onus that belongs on the people who also helped to promote this. The same way Sam Bankman-Fried was knowingly running a fraud, and had to serve real jail time for it. This is obviously not on the same level. There are billions of dollars at play in the scenarios I'm giving you. There's tens of thousands of dollars maybe at play in these scenarios. But I just think that there has to be something done to make an example and make a case to people that this is not acceptable and this is the penalty for it. Otherwise, the scams are just going to continue. They're going to accelerate because now we have AI tools to help us become better scammers, and nothing is going to get done as a result of exposés like this. This kind of investigative journalism that helps keep people honest is going to be all for naught, because nothing happens to these idiots that decide to make this the way that they earn a quick buck.
So what I actually want, I think, is public service announcements. We used to have public service announcements. Those kind of went away.
Come on, man.
And look, hear me out. Give me a sec. I'm going to bring it home. So radio stations, you used to have to dedicate a part of your airwaves to a public service announcement. Don't eat, don't smoke, go exercise, try going on a walk. And fun fact, one way that radio stations would get around doing PSAs that they found cringy is that you could, support the troops. So, you could say, YKCB supports America's heroes. And that would count as your public service announcement because it's like military appreciation or whatever. But to your point, the same way that cigarette packages in some countries say, smoking causes cancer. I want to see these prediction markets pay into a fund, and then you pay digital creators who know TikTok native audiences to do these promoted posts explaining exactly what's happening in this journalism.
But you just said why it won't work. The Surgeon General warning on cigarettes has been there for like 40 years.
And smoking has declined in the United States.
Yeah, but it didn't go away. I was just in New York and I saw this giant billboard where the don't smoke part of it was larger than the do smoke part of it. And people are still walking into the store to buy their cigarettes, like it in prominent lettering, this package will kill you. And people are like, yeah, sure, but later.
You're taking Peter Lynch the wrong way. I know you saw someone buying a pack of cigarettes, but overall, since the 70s and 80s, smoking has declined in the United States. And I think that there needs to be a way of, if you're having these casinos advertise on social media platforms, there needs to be a way of also telling people in a creative and engaging way that gets their attention, this is how the business actually makes its money. But to your point, don't believe everything you see on the internet. This was a piece in Vulture about the clipping economy. And this is ultimately what Polymarket was playing into, which is we're going to try to have people create content that looks native, but is actually advertising. And this is across the board with celebrities, musicians. My guess is that there's some political campaigns doing this as well. But this guy named Joe Lim, he ran a company called Floodify, which operated 65,000 dummy social media accounts. He said on a normal day, it would post 50,000 videos on social media that was designed to pass as, quote, unscripted output of normal users. And he estimates that 90% of what you see on the internet is advertising in disguise. Let's close out with this question we got from Matt in Denver. Appreciate you writing us. Such a thoughtful question. First one, I appreciate the show and all the research y'all do. I listen to your show regularly, as well as a few others where I found Ricky. I enjoy keeping in touch with the market and trying to pick stocks, but it's not my full-time job. Malcolm is always talking about how folks who don't invest as a job should probably not spend too much personal time attempting to pick stocks and stick to ETFs. I primarily invest in stocks through 60-day good till canceled limit orders. I find most of my stocks through podcasts. Then I will set a limit order on a price I think it could drop to, usually determined from looking at the chart over the past 5 years. I think this allows me to buy closer to the bottom without actively monitoring prices. None of the shows I listen to ever discuss the different ways to purchase a stock, so I'm hoping y'all would share your opinions on methods of buying market versus limit and any other ways I'm not familiar with. I'm 25 and mostly buying at this point, but intend to use the same strategy for selling. I have some thoughts on this, but generally the question from Matt in Denver is, how should I approach the act of clicking buy and sell for stocks? And I have an opinion on this, but I'd like to hear yours first.
There's a bigger, broader theme I'm going to go to eventually, but the first thing that I want to nitpick on is the idea of looking at the chart over the past 5 years and determining where you want to get into the stock based on the way it's traded for the last 5 years. That is a terrible way to pick stocks. And the reason that I say that is because past performance is never indicative of future results. What that means is you're looking at a stock that hasn't grown a ton and trying to figure out where's the places historically that it had these little blips that I can time it, set my limit order based on its historical pricing, and then go from there. But there's this thing called momentum, and momentum won't allow a stock to retrace its old price action, at least not anytime soon, because positive momentum is going to keep on pushing that stock up and to the right. Micron's a great example of this. I think I mentioned SanDisk earlier today. I'll use that example again. Like these chip stocks, as an example, are a great example of what I'm talking about. Or if you look at like CrowdStrike, that's a really great example. Started out $100 a share or so, $150 a share. I don't know if we've ever retested $150 a share since it broke out. So the 5-year chart on it might tell you that that's where you're supposed to set your 60-day limit order, but it will never fall from $700 down to $150 to let you get back to that 5-year historical price. So not the best way to think about it. You definitely want to be forward looking when you're trying to decide what's the right price to pay for a stock, or at the most, maybe be looking back the last 12 months. But that's about as far as you can go, because so many different things have happened under the hood at a company that can change its valuation metrics, that can change its revenue mix, that can change its customer base, all those different things. Anyway, the bigger point that I want to make there, what is your return on effort for all of what you're going through here, Matthew? And he didn't say his name was Matthew. He said his name was Matt. But I feel like I got to call him Matthew here to really get his attention. Like, what is the return on effort for going through the trouble of keeping up with all these different 60-day limit orders, for going through the trouble of doing the research on the 5-year historical average on this company? NVIDIA is another one that jumps into my brain that you're not going to get NVIDIA's 5-year ago number ever again. So rather than that, if you don't want to be in the business of picking stocks and actually having to determine when's the right time to get out and having the discipline to actually get out and suffer the seller's remorse and stay convicted about your decision to stay out when you sell the stock, all those different things that drive professional money managers crazy, finding some really quality ETFs or mutual funds, or finding your 10 to 20 core stocks that you want to own, that you have a reason why you'll want to own it for the next 3 to 5 years and stay there. That is the return on effort trade-off that I think is worth your time. Anything more than that, you're 25 years old. You said you should be spending your time learning and becoming an expert at a craft that people will pay you tremendous amounts of money for, rather than trying to make an extra $10 above what the S&P 500 is going to return you.
I have a couple of thoughts. I think that's well said. Since I know you're a fan of this show and another one of the things that I remember Jason Moser telling me is you want to be focus on being directionally correct and not exactly right as an individual investor. And I think that applies to what's going on here. I think it could be smart in some situations, but you may miss out on, some of the explosive upside returns that Malcolm has just discussed. And then from a fundamental perspective, you're 25 years old and you're doing a lot of these 60-day limit orders. How much, what's your percentage in cash then would be my second question on that. Please do not answer that publicly. That's for you to understand. But if you're doing these 60-day limit orders and you just have a ton of cash on the sidelines waiting for the right time, that may not be appropriate, may or may not be appropriate given your situation is you're waiting for the perfect time for these companies.
That's a great point.
I would point at that as well. The other question you asked about, which to Malcolm's point, you should be focused on making as much money as possible. You are you said you're a civil engineer and you wanted us to talk about public engineering stocks since that may benefit from the AI data center boom. I think that's a good angle for us to look into. But one of the things I would say is if you are a civil engineer, you probably know these companies better than we do, or the talking heads on different podcasts or cable news shows do. So that's a time where your experience may be an advantage because, if there's civil engineering companies that are really going to benefit from the AI data center build out, that's a potential angle, but I wouldn't say that we know that better than you do. Here's what I would say. The companies you gave us, AECOM, WSP, Tetra, I would feed that into Grok and say which of these companies benefit the most from the data center build out. And then it'll go through and maybe give you some ideas. It's not something to make a decision on, but it could be a jumping off point. But anyway, Matt, really thoughtful question. I appreciate you engaging with the show. And if you want to find Malcolm or I and ask a question, you can do it in the Spotify comments. If you want a longer form way, our email is thistimepod@gmail.com, thistimepod@gmail.com. Otherwise, you can find us on social media. You may or may not see Malcolm at Malcolm on Money. If you want to keep up with him, I'm at Rick So Slick on Instagram. That's the classier place to follow me than TikTok. Anyway, appreciate you staying with us. Thanks for listening, and we'll see you next week.
information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.